So without further ado, I'd like to welcome David Brown, Chair of the Board for Upstate Capital and Managing Director at Impellant Ventures. Nitin Pachesia in from California, Managing Director of Unshackled Ventures. And Heidi Knobloch here, she's with New York Ventures as a Senior Director for working with both emerging fund managers and with accelerator programs, as well as helping evaluate early stage investment opportunities. So I think we have a great lineup here of people to talk about building and growing VC funds. So I'll let you guys take it away.
Awesome. Thanks, Noah. I will say that I emailed these two and said, hey, I would like a couple questions that I could ask you. And the subtext of what they said was, Heidi, you're such a dynamic and engaging and wonderful question asker that we don't need to give you any questions. Feel free to ask us anything.
I think we specifically said as long as we don't have to wear sports coats and we can all cross our legs, we'll have
right.
the VC vibe nailed down. So this is
That's
perfect.
right, that's right.
I just said what she said.
So the thing I think I want to ask you first is why venture? You know, why are you engaged in venture? You know, David, why did you come back to upstate New York to start a venture fund? Nitin, why do you have a mission-driven venture fund? Why are you doing this?
You want it first or you want me to take this? Awesome. Two very different questions, two very different responses, I think. So why venture in particular? For me, entrepreneurship has always been the most interesting gateway for opportunity. Equity is the way that individuals can transcend and move from one part of the world to the next. And I honestly believe the vision entrepreneurs bring to being able to create and co-create really interesting, exciting ventures that are going to change the world is probably the most interesting, exciting thing that you can spend your time with. And so I moved back to Rochester after a time, both kind of investing and operating. And the reason I actually came back to Rochester had nothing to do with venture. You know, if you grew up in Rochester there, I did, we were the home of Xerox, Kodak, Bosch & Lomb. All three of those imploded during my high school. So by the time I graduated, about 20% of my graduating class had left or was in the process of leaving. And so I never actually looked at Rochester for coming back. My parents had a house in Colorado, we were always going out there. And what actually ended up happening is my mom got very sick. She developed a pretty nasty neuromuscular disorder. We were very happy in Boston, but had just had our second kid, and I said, fine, why don't we get in a car, we'll move back, see if Rochester is a place we can make a living, and we've got enough good friends here that I'll start a venture and I'll raise funds for myself, for my own venture. And what we found instead was that what I thought was gonna be a desert turned out to be a really exciting ecosystem. And we looked outside just Rochester to Buffalo, Syracuse, Ithaca. I saw that pattern repeating itself over and over again. And so the genesis for Impellant was really saying, how do we infuse ourselves into the bridge between tier 1 and tier 2 technology marketplaces and create better opportunity for entrepreneurs to stay where they are and to drive value for their ecosystems, while at the same time being able to enact some of those life-changing or world-changing views that they're so excited about.
Well said.
Thanks.
Same one-word reason, entrepreneurship. Didn't think I was going to become a VC as such, and I'm not a VC. VC is the business model that I use for the firm we started. But truly was trying to start my own company. The backstory, grew up in India, came to the US after spending 3 years in Asia Pacific, stayed with Deloitte for 5 years, then joined a startup, then tried to start a company. And I would have happily been building software companies if somebody else had done what we're doing now, which is if you're an immigrant founder who's still on a visa, can you start your company? And in trying to answer that question for myself to go full-time working on my company, whatever I learned became this knowledge pool that we pulled into Unshackled to help tens of thousands of other entrepreneurs who are trying to do the same. Or I could have just kept it to myself and then it would have been an ROI of nothing. So the venture, you know, as a VC is what we are today, but what we really want to enable is very similar to what David said. Entrepreneurs who want to change the world, we want to be in their service. We want to enable them, and in doing that, think all of us play a very unique role in whatever friction we can remove, and for Unshackled, that friction starts with the immigrant journey. So it could be immigration, it could be connecting into the community, could be connecting with downstream investors. We keep learning from founders who we work with on what is the bottleneck, what is the next thing that is slowing them down. We take that away.
Awesome. So that's the why. So now good, bad, ugly. I think we will start with bad and ugly, maybe, and go back
Good,
around.
bad,
to good.
ugly. Is that
That's right. So you guys kind of said your why, right? Which is your purpose for doing this.
Mm-hmm.
But for people who want to start funds, I think sometimes they underestimate how difficult it is to raise money and how difficult it is to deploy money. So could you just speak to the tension that you have between, having this purpose? As you said, you're an accidental VC, or I guess I'm putting words in your mouth, you're an accidental VC. What's it like to raise funds?
Yeah, I would say we're still overly optimistic, right? Like we're still learning as we go. Fund one, when we first went out to raise it, we closed February 2020, so February 15th. That was our first close right before COVID really kicked in. And I went out having never raised a fund before. I was like, this is going to be a $50 million vehicle. We're going to have so much fun. Raised $10 million, COVID kicked in, and we're like, 10 million is perfect. That's exactly what we're doing. Fund two, I added a few more partners. We said, we're going to go do a $50 million fund. Really started running through, figuring out what that means. We got to $25 million. We're very excited about what that means. Hopefully fund three, which we'll launch at the end of this year, maybe that'll be a $50 million vehicle. But I think there are two things that I think are fundamentally really tricky about starting a fund, especially if you haven't been in venture before. One, you've got to find true believers. You've got to find people who like you for who you are, who trust that you're not a complete idiot when it comes to making investments, and who are willing to ride a journey with you, not just for one fund, but hopefully for multiple ones, because it's going to take a while for you to actually prove whether you're good or not at this, and it probably is going to take 3 to 4 really good fund cycles to get you down that pathway. I think the second piece that kind of leans into that, right, is that as you're building a fund, and I don't know how many people are looking at doing this after having been an entrepreneur, when you're an entrepreneur, VCs tell you where they are. It's pretty clear who you're supposed to go raise funds from. The people who raise their hands typically in venture and say, I'm allocator, I'm looking to deploy capital, historically are focused on later stage funds. They're the ones who have the privilege of being able to wait to see where performance lays before they start to allocate it. And so what that means is that as a new investor, as a new fund allocator, you've got to go find people who don't hang a shingle saying I'm looking to invest, who may not be in your network, and you have to make a lot of asks, a lot of very personal asks to do that. I found deploying capital to be a lot easier. Luckily we came from an operate perspective, so we've got really good relationships and deal flow, history on that. But I think if not, right, like your name and your recognition, particularly at early stage, is short-lived, right? The best returns for new fund managers tend to be in the first 3 vintages, because that's when they're freshest. That's when people actually know who they are. And so you have to be willing to hustle, and you need to be willing to show up. I mean, I literally went from Rochester to Boston last night because we had to meet with a bunch of companies back here, and then I'll go back to Boston to have a few more conversations before back to Rochester next week, and then Germany, the week afterwards, right? So you always have to be hustling, and I think that's the piece that if you don't have that energy, that's going to make it really hard to sustain as an investment partner. And you have to really love it, right? If you don't love what you're doing, if you don't have the same sort of this is what's going to change the world perspective, you're not going to get rich anytime soon doing this. And so you have to have a wherewithal and stick to it.
I think raising is easy. I think deploying is easy if you have a unique edge, or easier. I think that the toughest part is making money for yourself. You're not going to make money for 15 years. Like, you're not going to see that first dollar of return for 15 years, because the maturity cycle, especially at early stage, so we're investing at inception. And for companies to become meaningful, that cycle is now 14 to 18 years. So the patience that it takes to persist through what's going to happen. You raise money, you're excited, oh, now I get to deploy. you start deploying, you got to build a process. You're especially if you're unique, you're going to have a ton of deal flow, and there's a lot of ugly in the deal flow, so you got to filter through the noise to find the signal. But let's say you're a great operator, you can build that process. Then starts the next phase of failures are going to start showing up, right? And they're going to show up much before successes show up. Successes are directional. The company we invested in at pre-seed will raise a seed, will raise a Series A. But the companies that are not raising money are going to run out of money, and so that's like an emotional thing that I had to personally overcome. Is, oh, this is personal. Like a founder that I know and the company that I invested in is now out of business. So getting over that was a process. So any new manager, be prepared for it. And then it's just working with companies. Fortunately for us, both Manan and I have really deep interest in solving problems. And so anytime any of our portfolio companies are at a point where we don't know what to do here, we love jumping into that and supporting, not just with our knowledge, but with the wisdom of the community that we have behind us. But to me, the most challenging part for a VC is it's going to take 15 years to find out if you're good or not and how good you are.
So let's talk about segments of LPs, because I think sometimes people think that they're all the same, but really the market is pretty segmented. And so to do that, one of the things that the three of us have in common is that we work with SSBCI funds. So for those of you in the audience that don't know what SSBCI is, SSBCI stands for the State Sponsored Credit Initiative. So this was an initiative put together by the U.S. Treasury. New York State received $500 million and California received $1 billion. The New York State money was split relatively evenly between capital access programs, so lending and debt, and venture programs. And so David pitched us, and we made an investment into Impellant, and Nitin was the first fund to receive an investment from the state of California. So I think if we could just kick it off by talking about maybe institutional investors, where you look for these opportunities, and how you segment your LPs.
Nitin said this is easy, so I'm going to let him.
It's easy relative to the other parts. I think institutional LPs are an interesting beast, and I think David kind of hinted on one part of it, which is it's opaque. The system is intentionally opaque. A lot of allocators don't like to be out like we are. We're actively going out seeking deal flow. Coming here for this, I was looking for opportunities to do anything I can do with the ecosystems around here. I want to make the most of it wherever I'm going. Institutional LPs do not operate like that. And so there's built systems that we didn't come from VC, so we had to learn how to do that. So we used our first two funds to learn how institutional LPs work, what the vocabulary is, which was very different from what we were using. So there's a learning curve. And what we found is there are, just like VCs, LPs are not all equal. Everybody's got their own philosophy on, some will just track brand names, some want to look for interesting strategies and learn from those and follow those managers for a little bit to build that relationship and then invest. Some are very purposeful, like the SSBCI funds, where it's a clear mandate, this is what we want to do, and within that we want to go find managers. But just like anything in the entrepreneurial ecosystem, the passiveness or activeness of LPs differs. And so what we've kind of gravitated towards is, who are people like us? Who are we going to have fun working with? Who are responsive the way we are? Who are thinking about the future the way we are thinking? And that's where we spend a lot of our energy, is from the first conversation qualifying, these are people that kind of look at the future the way we do, and are managing funds with a few more commas than us, but they have similar worldviews. And that's where spending more of that time has led to building those relationships. So it becomes easy over time because When you've been in something for a long time, people see that you're staying true to your strategy, you're disciplined about that strategy, the strategy is working. You said you were going to do this 10 years ago, you're still doing this, so there must be something that's keeping you into it. And that has a compounding effect of ultimately getting to that conviction of, I want to trust you with my money. There is a big bottleneck with younger firms because no allocator is going to get fired for investing in a Sequoia, Lightspeed, and recent Tiger. Well, talk about Tiger. But if Unshackled is an unknown name, and if we do something that the fund blows up, so the allocator has to be extra cautious if they're doing that more diligent work to be sure that the small check that they write in a small fund like us does not become a reason for them to look bad.
Mm-hmm. Yeah, I think you hit on one thing that I want to start with, and that's that you're building a real relationship with someone you want to spend a lot of time with. We always talk to our entrepreneurs about this. When we make an investment, our average tenure for an investment is going to be between 7 and 10 years of working directly with that founder. 7 years would be twice the average American marriage. So these are like real commitments. When we look at an LP, we're actually expecting these folks probably to be with us for 3, maybe 4 funds. Obviously, we can fire them. They can fire us if something doesn't work out. But we're at least 10 to 15 years with those folks, most likely 30 or 40. We're talking about people we want to spend our entire lives with, right? Like these are real commitments, and they're going to watch our entire careers. And so finding a fit there is so important. And I think that's why that dance lasts for as long as it does. And so I think you brought up a very important part. I think, Heidi, part of your question kind of said, like, what is the world of potential investors? And it is enormous, right? Like some terms that didn't even make sense to me when we first started. Just on the individual wealth side, you got individuals who can invest, you got family offices, multifamily offices, RAs, which are obviously conglomerating cash from a bunch of different individuals. And then you start getting to the institutionals, might be a fund of funds, right? So now they're going to the wealth and they're collecting funds to invest in a lot of different funds, and they're taking a skim on top of that. You get the larger institutions that might represent a corporate entity, a state entity. So there's a lot of different pathways, and each of those pathways, and even each individual within those pathways, has very different criteria of what they're looking for. People like to joke, when you get in the industry, if you know one family office, you know one family office, right? It doesn't have any translatability from one thing to the other. And so what you're figuring out is not just the dance of the individuals, but also what is their investment mandate, what matters to them. A little bit of your mission might switch a little bit to help support some of the LPs that you're working with. I think at the end of the day, when you're thinking about where you're going to take capital, you got to think about how you fit into their overall strategy and how they fit into their strategy. I guess we're driving somewhere now. That's exciting. But so, one great example, right, is like we got introduced to an awesome fund right off the beginning, a great fund of funds. I shouldn't say great, I mean, it was foreign money and it probably came with a ton of stipulations. And we get off the end of the call and the guy's like, this is amazing, I love what you guys are doing. How much are you raising again? I was like, well, we're trying to raise a total of 50. He goes, my minimum check size is 50. I was like, okay, that doesn't sound like a problem. He goes, yeah, but I don't want to be more than 10% of your fund. We have a very specific mandate. So I was like, great. Well, I should have probably figured out, even if less, we're raising $500 million, we probably shouldn't even be talking. And so you spend a lot of time, kind of getting to know where the strike zone is for a lot of these people. Mm-hmm. But again, even if you think you're figuring it out, you're going to learn more. And you're building a lot of really good relationships, but it's a lot of them. It's a lot of time.
Just to add to the last point, mandates change, and sometimes people also move. So the value of building relationships still stays. And we've had some institutions that had the same thing, like our minimum check size is bigger than your fund, and we kept in touch. We kept them updated. They kept us updated. And now there's a new CIO who said, oh, we can carve out this small bucket where we can write some checks in smaller funds. Mm-hmm. So environment can change, but relationships, if they're strong, are in a position to take advantage of those changes.
No, that's exactly right. I mean, Jennifer Teagan, who helps with Heidi's side of things, actually started as a VC. And so our relationship to New York started as, cool, co-investors, this is fantastic. That changed, and now we have an LP that we're working with to help them get into the VC game because they want to switch their day to day. And you never know where these things go, and it's part of the fun and part of the challenge.
So for people in the audience, I will say, and we actually have some people in the audience who we've made other investments from SSBCI in, but just to talk about the New York State initiative. So we have 2 programs within our fund of funds. The first is the Emerging and Regional Manager Fund, and the second is the Community and Regional Partner Fund. And those 2 funds can invest checks of $2 to $15 million into funds. They have slightly different requirements for each of the programs, but the main push behind those funds is to invest in socially and economically disadvantaged individuals, or SETI individuals. So that can be where a founder is located, that can be the diversity of the founder, but both Nitin and David are committed to that aspect of their funds, and so we're very grateful for you guys being part of the program.
Is this where we're supposed to say we didn't know that was part of our mandate? No, we're excited about that as well.
So in addition to not knowing what I was going to ask you, I also don't know how long this is, and I don't want to not get to the good parts, right?
Okay.
So what are some of the things that you are just like, when they happen to you, you're just thrilled? Like what is something where you get to your office every day? I'm sure neither of you have offices, but you get to your office every day and you see something come across your desk and you're just ecstatic.
2 things I'll share. The light you see in people's eyes when you give them the opportunity that enables them to be the best version of themselves. And one of the best examples of that was we just made 10 offers last week to 10 solo founders who are all on visas, different kinds of visas in the country. And our teammate Elizabeth, who made those offers, recorded when she made those offers. And she showed us the 5 minutes reel, and everybody in the room was crying because of the emotion that was felt through that video. Everybody's being told, or it's a very common thing that people who are on visas get told, you're on a visa, you can't start a company. And then somebody comes along and tells them, immigration's not gonna stop you. And that, the joy and the energy that suddenly shifts is what keeps me going.
I think it's very similar. Our wins are our entrepreneurs' wins, right? I started by saying I get excited by watching other people fulfill their dreams. I love to be part of it, but we also understand that we're a small part of it. And I think what's amazing to me is, we have 45 companies in our portfolio right now. We add about 1 new one every single month. And a lot of these guys, sometimes you talk to them and you catch up with them once a month, or maybe a little bit more frequently. Then they start growing, maybe it's a little less frequently. And there is often a passage of time from when you might have gone and seen their office. Like, you're right, I don't actually have an office. I've got a bunch of like random spaces that I like to crash in. And thank you to all of our service providers for caring for us like that. But when you walk into some of these offices and you realize that that team that was 2 people is now 100 people that are creating real jobs, and have people that care about them, and that they're hitting successful milestones that are self-fulfilling and very exciting for the founders. It's just, it gives you chills every time, right? Like, it's hard to explain. I would say that's probably the number one thing that just kicks me off every time, is just like, that's awesome. The other piece that for me is just fulfilling is you wake up in the morning, you have a schedule of 15 meetings, you don't know where they're gonna go, and you get that one meeting where the person's vision and excitement teaches you something that you didn't know when you woke up that morning, and you start to look at the world differently. That's really cool. That gets me excited every time.
One time I was told that I couldn't speak at the young professional events at the chamber anymore because everybody would quit their job afterwards, and I feel like I have to say the same thing about you guys. I feel like everybody in here is going to start a fund thinking that's the best. So.
I think we went over the hard parts of this already.
Yeah,
right?
that's right,
We can
that's
repeat that if we need to.
So there are some people in the audience who I know who work with founders very directly, either as entrepreneurial support organizations or in tech transfer offices. So if you guys could just speak speak to, not necessarily what exactly you invest in, but the founders that you see that really come prepared to pitch your funds?
Mm-hmm.
Go for it.
Yeah, I mean, we have a very strange philosophy. So we specifically look at pre-seed and seed stage funds or companies, and so that means the companies might have revenue, might not have revenue. Typically, they're just starting to figure out product market fit and a go-to-market strategy, and so they're really early on the ideation stage. And so what that means for us is that we honestly believe that 100% of the businesses we invest in are wrong. And that's not because the founders are stupid or because they're malice and have bad intentions. It's because at the end of the day, you need to build something in service of a customer, and you need to be able to think about, adjust, and continue to augment your business based on what you're learning. And so the founders that we ultimately write checks to, the company is probably interesting, but we know it's going to change 15 times over. What we're looking for is, how are you approaching the world? How are you thinking about what's going to be there? How are you uniquely differentiated to have impact within that space? And then, are you a leader? Because at the end of the day, right, it doesn't, well, I guess there's two things, right? You have to have grit because you're going to get beat down, right? That's part of entrepreneurship, and so you got to be able to come up. But you have to be a leader, because at the end of the day, if you've got a great vision, but nobody else is going to help you build that vision, you're just going to be shouting from the top of the mountain. And so we spend 90% of our diligence looking at the people, how they're responding. And I think when I look at my own partnership, right, what I love about the folks that we work with is they ask questions in very different ways. And so we get to stress test entrepreneurs from a lot of different directions. And so if you are in the support entrepreneurial system, right, and you're thinking about who you're going to support, how you're going to spend time with them, help them think through their model, right? Like, a business plan actually has a negative correlation to success. We wrote a report when I was in business school that surveyed everyone who had ever gone to Babson and started a company, and they showed that if you write a business plan, it both negative correlates with revenue as well as funds raised, because once you become too concerned with executing against what you think you're supposed to do, you stop listening to the customer and stop actually modifying and building the business. And so if you can really help people think about the adaptability, the customer directedness, and testing ideas before you build product, I think that's going to be the most exciting thing, because people are going to learn a lot about themselves, and they're going to learn a lot about the audience that they're trying to work with.
A lot of similarities. We invest only at inception stage. There is no product, there is no revenue. There's a person or a few people, and so that's what we focus on. We intentionally try to shift the conversation from being a pitch to being a conversation, and that's how we get to appreciate the person instead of the label of this is a startup or a founder. And when that conversation shifts, there's clearly an opening, very intentionally created by us, to really get into what is your distance traveled, which is our phrase for you didn't just show up at Stanford one day. You were born in certain circumstances, and then you went to somewhere, and then you did something, and you worked your way to Stanford. So instead of just saying you're a Stanford grad and just stopping there, or you are from a university that I've never heard of, or you're a high school dropout and you're trying to build airplanes, just what is it that you've done through your life that brings you here? And based on that, can we imagine with you the potential leader that is inside you, right? And so it's a lot of imagination. It's imperfect, but the willingness to really look at the person and then be ready to learn from them, because whatever I know is outdated already. Our business is all about knowing what we don't know and finding the outliers. So if something's fitting too well in the pattern, it's too late to invest in that. We should not. And so really looking for what is your unique way of building the next very, very successful company. Yeah,
to what you were just saying, we ask a question if anyone's ever going to try to pitch us. We'll call this a shortcut to the interview process. We always like to ask, what's the hardest thing you've ever had to be gone through in your life? and I don't care if it's professional, personal, or in between, how you think about that journey, how you reacted to it, and what you've learned from it, I think is incredibly poignant in terms of us understanding who you are as a person and how you're viewing the world.
So you're both pre-seed, seed, and I know that a lot of the due diligence is around the team, which you've spoken to. But could you speak to the other due diligence that you're doing for these companies? Because I imagine you're making potentially reference calls or looking at the market or things like that. So if you just want to speak to what your process looks like.
Again, is this where we're supposed to say, oh, we're supposed to do all that stuff as well? That's useful.
Yeah, that's right.
Chris Rohde's speaking next. He can tell you everything that he does for us on the legal side. Yeah, no, I mean, look, I think there's a lot of things that we hit, right? Like the traditional business school, how to be a VC will tell you, make sure you get the right TAM. Is it big enough? Address the fundamentals of the unit economics. That when you sell, are you going to be able to acquire customers for less than their lifetime value is going to be? Is there, are they hitting certain numbers that have a repeatability? I do think those things are important at the earliest stage, right? Like you're looking at the fundamentals of how you're modeling your business, more so than how is the business fundamentals actually designed. And so what we do is we actually jump much more into how are you building your projections and how are you thinking about the go forward, because it's the same thing, right? What's more important to me is, are you asking the right assumption questions about your market, and do you know where your proof disproof points are going to be, because that's what's going to be really interesting. After that, and after doing the diligence on the individual, right, and we do background checks, we do all sorts of reference calls about individuals, then you start to go into the, is the legal that you guys have set up correct? Are you the right organizational setup? Are you going the right direction? If you have patents, you have IP that's central to your business, how well protected are those actually? And you can cover some of those pieces. But again, that's less of the day-to-day.
Yeah, I think it depends on the nature of what they're planning to do and how deep tech or deep science the company is. The deeper it gets, the more we can actually diligence on the science front. But really our process is meet the founder, see if we can get to our conviction. And once we have conviction, the rest of the diligence process is about confirming that what we heard actually checks out. So it could be about the people, and therefore we'll find some other people that we know in common and try to validate that what we've heard makes sense and resonates. If it's about hypotheses of their business, we'll go and confirm that through our community, that they're not just giving us some BS. It's actually work they've done and it checks out. So it's more confirmatory than your numbers are right or not, because there are no numbers at that point, and whatever numbers are wrong.
So what does the next fund look like besides $50 million?
No, that's it. That's all. Once we have the money, we don't have to do anything with it anymore. So I think we're going to continue to double down on what we have right now, which is looking at how do secondary markets or re-emerging tech markets work with the primary hubs, and how do we continue to drive greater mentorship and late stage financial support through that. We based our model originally off of a group called Founder Collective out of Boston. In my opinion, they're the best seed stage fund that's existed to date, and they have been hyper concentrated on staying sub $100 million, hyper concentrated on making sure that you have founder alignment, so you're doing one at most 2 checks and not going any deeper. We're going to continue to double down on those things, because that's where, one, we think we have the best sweet spot is going 0 to 1 or 0 to 10, and then also where we think that the founders need someone really on their team. And if you continue to change your model and you go to late stage in terms of follow-on, your incentive becomes how much can I buy of your company versus how do we build a really valuable company as a team. And so we're being very conscious of doing that and doing that the right way. We'd much rather see a lot more deals and more founders that come into our portfolio than owning significantly more of those founding teams.
Our next one will be the same as the prior fund. The only thing that's changing is in our first 3 funds, we invested collectively about $6 million in building the employment and immigration platform that has been used by these funds. So one part of our investment strategy is to hire the founders at our research lab, and that way we become the sponsors. They don't have to worry about immigration, and there's a lot of research going on at this research lab that gets commercialized 100% of that. So that investment is now at a point where we don't need to continue investing in that. Now it's at operating level and we can absorb that. So next fund onwards, there's going to be no load on the fund, but otherwise the strategy will continue to be invest at inception stage, start companies with founders. Every company we invest in has at least one foreign-born founder, and we're not gonna move from that strategy.
So I would be remiss if I didn't ask a New York State-centered question. So, David, you are located in Rochester, committed to upstate New York, also invest in companies outside of the state. And Nitin, you've met with some of our centers and have had the opportunity to meet with some people in New York here today. So. If each one of you, and I promise not to send this to California, if each one of you could just talk about the unique competitive advantage that you see in New York, and especially in upstate New York.
Well, competition is great, so please send it to California. Complacency is not great, especially for government. So let them compete. I think I'm still experiencing the ecosystem, but from what I've heard so far, there is a lot of STEM research work going on upstate, and so I want to continue to learn more and use these relationships to not just like show up once and disappear, but engage with the founders in this ecosystem. And so one thing I can promise is follow up. Wherever I've gone, wherever I've built relationships, I will follow up, and as long as I get the response, we'll do our part. We do have a teammate in New York City, so anytime we're doing a hackathon here or something else, it's easy for her to show up. But as a state, like we have a lot of portfolio companies in the state of New York, so there is a gravity already, and we think it will just continue to grow with this work.
Yeah. I think about my lens to Western New York as being very similar to the lens I was given when I was in Boston. So my last role before I came back to Rochester was running innovation leadership for the Chamber of Commerce in Boston. It was a short gig, but it was very interesting, kind of helping think about, how does the city, state, and ecosystem think about entrepreneurship, innovation, and talent. And one of the pieces that was really interesting in Boston is that you have 4.5 million people, and you have 83 universities and colleges within that greater area. And if you drove from the north side of Boston in that geographic area to the south side, it's about 2.5 hour drive. If I'm sitting in Rochester, and I think what it takes me to go from Buffalo to Syracuse, it's just about 2.5 hours. To us in Albany, from Rochester, that's a 3 hour area. Within that same geographic footprint, you have about 4.5 million people. You're very similar as an MSA, and the drive times are actually very similar. It's just more geographically spread. And instead of 83, I think we have 60 colleges and universities, STEM leadership, unbelievable quality within our upstate area. And so as I view it, right, like we're just starting to catalyze. And the issue that Boston had that they finally figured out how to reconcile or starting to reconcile was retaining. So they were retaining about 2% of their college graduates. That's now up to about 5%. That's why that city's grown like crazy and why STEM is going nuts there. You see similar things in New York and San Francisco, and then they become net, retainers and importers of talent. I think Western New York as an entity is starting to see that, make that turn, and you're seeing people who want to stay and create, and that's awesome. Now what we have to do is provide them the pathways, and there's two pathways to do that. One is to invest right out and allow them to start their businesses and create the impact right away. The other way is to continue to import jobs and opportunities in STEM-related fields. So when students first get out of college, they've got something to do for the first 5 years. That same study that I was talking about for Babson, one of the most interesting things that they found, the number one indicator of successful entrepreneurship was being 5 to 10 years post your terminal degree. It didn't matter what it was, but if you started that business 5 to 10 years out, you just start really building good relationships within the industry. You're really starting to have a vision of what's unique and what's differentiated. And you also have some of the requisite skill sets to go out and make real impact. And so I think those are our two opportunities, is to turn right at the beginning and to be able to retain over the long term. And I do see that happening, and I see that energy of entrepreneurship underpinning so much of not just the Western New York region, but the entirety of the upstate and downstate parts of New York.
Well, thank you so much for joining me today on this stage.
Thank you.
Our pleasure, thank you.
Yeah, thanks.
Yeah, this was great. I actually learned a lot and really appreciated all of your comments, so thank you. And I thought you did a great job, given that they didn't give you specific things they wanted to touch on. So thank
As we
you.
said, we didn't have to give her anything. She had the ideas
Yeah.
just
I
floating
think
up
in
there
just,
ready for
just
it. So.
15 seconds, if I can add a thought, just,
Yeah.
when I think of an ecosystem, or you look at any ecosystem that is hot now, the hotness started about 20 years ago. And it started with smart people moving into that ecosystem. You all have that going on already with the 60 universities. You have people from all over the country and also all over the world coming here with ambition. All that's needed is to shift something in the ecosystem that more can stay here, more want to stay here. And if you think of it from an immigrant journey standpoint, someone who was born in wherever, pick a country, has moved here, spends 4 years or 6 years with higher ed, do they really want to move again? If they don't have a reason to, they will likely want to build their company here. So if we can understand better for what could be that something that would keep them here, all it takes is 1 or 2 companies becoming very successful, and then the cycle has started. So anything we can do to support with that, we're more than willing to, and I would love to learn from people in the ecosystem what that could be.
I would say, and I know we do have to wrap, that pay forward mentality of how do you continue to support, like that's one thing that we have in droves in this area, and that I've really seen crank up. We went from fiefdoms to this is how I'm protecting the area that I live into to, hey, maybe this doesn't benefit me today, but let me help you with this because I think it's going to be very important for tomorrow. And that's what's always created great ecosystems, and I think that's where our real opportunity lies.